Real estate investment trusts, REITs, are a relatively new investment option in India, but they have quickly become popular among investors looking for a way to get exposure to the real estate market without buying a property outright. REITs are essentially companies that own and operate income-generating real estate, and they offer investors a number of advantages, including 1. Liquidity. REITs are listed on stock exchanges, which means that they can be bought and sold easily. This makes them a more liquid investment than traditional real estate, which can be difficult to sell quickly. 2. Dividend income. REITs are required to pay out at least 90% of their taxable income as dividends, which provides investors with a steady stream of income. 3. Diversification. REITs can invest in a variety of real estate assets, including office buildings, retail properties, and hotels. This diversification can help to reduce risk and volatility in your overall investment portfolio. How to invest in REITs in India. There are three main ways to invest in REITs in India. 1. Direct investment. You can buy shares of individual REITs that are listed on the stock exchanges. This gives you the most control over your investment, but it also requires more research and due diligence. 2. Mutual funds. There are a number of mutual funds that invest in REITs. This is a more hands-off approach to investing, but it also means that you have less control over your investment. 3. Exchange-traded funds, ETFs. There are also a number of ETFs that track REIT indices. This is a good option for investors who want the diversification of a mutual fund but also want the flexibility of trading like a stock. Which REITs should I invest in? There are a number of factors to consider when choosing REITs to invest in, including 1. The type of real estate assets that the REIT invests in. Some REITs focus on office buildings, while others focus on retail properties or hotels. It's important to choose REITs that invest in assets that you're familiar with and that you believe have good long-term prospects. 2. The dividend yield. The dividend yield is the amount of income that a REIT pays out as dividends relative to its share price. This is an important factor to consider, as you want to make sure that you're getting a good return on your investment. 5. The management team. The management team is responsible for running the REIT and making investment decisions. It's important to choose REITs with experienced and reputable management teams. REITs can be a good investment for investors who are looking for exposure to the real estate market without having to buy a property outright. There are a number of different ways to invest in REITs in India, so you can choose the option that best suits your needs and risk tolerance. If you're interested in learning more about investing in REITs in India, I encourage you to do some research and speak with a financial advisor. REITs can be a good investment for many investors, but it's important to understand the risks involved before you invest.